Welcome to the Building Web3 Podcast. I have my good friend Peter. He's the director of marketing at Circle. Real quick, before we get too deep into Circle, could you give us your background and how you got into this Web3 world?
Yeah, definitely. Thanks for having me. So I have a pretty traditional B2B marketing background. And then about 3 years ago when I joined Circle, I realized how boring B2B SaaS was and how exciting crypto and stablecoins in this industry can be. And so I made the jump over to focus on global marketing and internationalization at Circle, as well as some of our campaign and marketing efforts, and work on a little bit of everything marketing related here at Circle. So happy to be chatting today.
Yeah, lovely. Well, for people that have maybe been living under a rock or new to the crypto ecosystem, talk to us a little bit about what is Circle and what's the mission there?
Yeah, so Circle, we have a few things that we work on today. We're most well known for our stablecoin USDC. We have a secondary stablecoin, EURC, which is the market leading MiCA compliant euro denominated stablecoin. And then we also have a suite of infrastructure and products and services to help developers and businesses build with stablecoins. And so think about us as a stablecoin platform that offers the infrastructure as well as the stablecoins to be able to do everything that you can do with programmable money. And we continue to build and innovate in the space. And this year, we're excited that people want to hear more about stablecoins. It feels like we're at an inflection point this year that we've seen usage and demand rise over the past 5 to 6 years. And now this year, you see conferences like Money 2020 and all of the big conferences in finance, and people want to talk about stablecoins, and it's one of the main themes. So we're excited to be leading in the space, and we're excited people want to hear more about stablecoins.
Yeah, absolutely. And let's imagine that somebody's coming here and obviously they've been using stablecoins, or maybe they haven't, maybe they're new to the ecosystem, but talk to us at a broad level. What is a stablecoin and the different ways of creating stablecoins?
Yeah, so a stablecoin is essentially digital money. And so if you think about everything that we use today, it's gotten better by the internet, the ways we communicate, our text messages, our emails, the way that we order groceries or order food to our house, everything's gotten better, essentially, except for money before stablecoins. And so stablecoins is a way to bring dollars and money as a whole on the internet to give it the benefits of the internet. It makes it programmable. It makes it easy, cheap, fast to send, and it makes it widely available to everyone. Physical dollars being shipped around the world, kind of in the past. If you think about $100 bills, like physical fiat, 90% of it is held outside of the US. And so there's a big logistical challenge that comes with moving money traditionally before digital dollars. We're trying to solve all of that with stablecoins and just make money move better and work more frictionlessly.
Yeah, so I think a big use case, and people can go back to past episodes, but I always talk about this. I pay my rent here in Colombia, Medellin, Colombia, in stablecoins. So talk to us a little bit about what are some of the issues that exist with like things like cross-border payments, or like they're like, why can't we just send wires or ATH or Swift?
Yeah, so a lot of the problems traditionally with moving money come from two things. Large corridors being built on top of legacy financial systems that are just outdated, really hard to kind of reconfigure. And two, those processes have just gotten much more complex over time. And so there's a lot of intermediaries throughout the process that, one, make it difficult to change, and two, take a lot of percentages and bips when you're trying to move money cross borders. And so what stablecoins and digital money allows you to do is it makes it programmable, which helps remove some of those intermediaries. And it's just a better way to move money than some of those legacy financial systems. And so you hear people say a lot like update the financial system. Digital money is just an upgrade to traditional financial rails that have just become outdated and antiquated and too hard based on a variety of reasons to just change. And so just integrating new rails for cross-border payments, we're seeing a lot of success today. The corridor for remittances from the US to Mexico is the biggest corridor for money moving from the US. It's a $63 billion a year market. At monthly rates that are annualized based on the last couple of months, about 2% of those flows are happening in USDC now. And so it's not just kind of us crypto people and us stablecoin people saying, hey, this is a better way to do things. We're actually starting to chip away at those flows at a rapid pace just because people are realizing so quickly the efficiencies that can be gained, especially at scale, by using something like stablecoins, especially when you consider some of the traditional fees to send money cross borders can be 3% to 60% to even more sometimes if you're trying to send a small amount.
Yeah, it is quite startling how many wire fees you can really get. So talk to us a little bit about USDC and what kind of stablecoin is it. In the past, we've talked about, real world asset stablecoins. There's synthetic stablecoins. Talk to us a little bit about USDC.
Yeah, so USDC, the concept, at least to me, is simple, which I think makes it really elegant and work well. It's just a dollar based on the internet. You give us a dollar, we give you one USDC, we take that dollar, we invest it in treasury bills, short-term cash equivalent investments. And so we make a little bit of money on that. And because we make that, we give you that digital dollar that you can use on par for a dollar. And so what people typically do with that money is they use it the same way you use money today. It's send, spend, save, and trade. Those are kind of the four typical use cases that you'll see with something like USDC. And each one of those use cases is kind of getting built out by entrepreneurs and existing fintechs within the space to help make those things better than they exist today. How can you save dollars better around the world to have access to stable savings? How can you send money around the world and have it replace how you used to send money with wires and transfers like you talked about before? How do you trade better? How do you have pairs with USDC that are available for trading 24/7 as opposed to the legacy stock market that's more of a 9 to 5 adherent to the banking system market? And so how do we take all of these things that money has historically been used for, and how do we just make it better with digital dollars based on the internet? That's kind of the concept behind USDC. And then I think what we're starting to see more of is what use cases didn't exist before because money was just so hard to move. There's things like micropayments that people love to talk about. Imagine you're a Cabify or an Uber or a Lyft driver somewhere, and you have to wait 7 days for funds to settle before you can get paid after working for those 7 days. What if with things like USDC and stablecoins, transactions could settle instantly and you could get paid out as soon as you get work done? I think that there's a lot of sort of concepts starting there, but going even further reaching that we just haven't seen possible before, that stablecoins enable, that we'll really start to see over the next couple of years now that people are excited about stablecoins more than ever and really building in the space.
Yeah, so we've talked about cross-border payments, remittances, things of that nature. How do you see this playing into as well, maybe traditional financial institutions? Do we see that traditional financial institutions like a BlackRock, a Morgan Stanley are moving towards stablecoin adoption, or what's the general trend you see?
Yeah, there's a lot of opportunity on the institutional side. I think that's where the most money sort of moves. One market that I like to use for reference is a foreign exchange market. It's a $6 to $12 trillion daily money movement market that's just kind of riddled with inefficiencies, which if you look at sort of this future the future market of stablecoins, and you assume that every major currency has a fiat-backed stablecoin in their local currency that has deep liquidity that can handle some of these foreign exchange type problems, it just becomes as simple as moving data on the internet, but it's money moving across the world. And so that's something that can really help improve institutions, as well as you're seeing a lot of the big players from an investment perspective start to open these tokenized money market funds that are really gaining traction. And the benefits of them are they're available for trading 24/7. There's a lot of inefficiencies to be gained. And a lot of these providers are using USDC as the on and off ramps, as opposed to if you think about a wire transfer or a bank, you're adherent to the 9 to 5 banking system. You have to wait a lot of time for those funds to settle. Using something like USDC as on and off ramps to tokenize funds You can do that 24/7 because USDC is also available 24/7. So I think you'll see a lot of stable coins, especially USDC, paired with these tokenized use cases and become sort of the default on and off ramp to these tokenized funds and these tokenized assets that people are innovating on.
And one thing you mentioned earlier is you guys are not just, a stablecoin provider, but you also have a stablecoin like platform, so to speak. Could you describe a little bit more like what you mean by that?
Yeah, so if you're a Web2 company or if you're building and you want to give people access to the benefits of crypto and Web3, one of the first things you have to start with is wallets. And so we offer a programmable wallets product offering. So you can spin up wallets for all of your users, and so they can get the Web3 benefits. They can access crypto. They can use stablecoins and USDC. We also have some other offerings that we're starting to pair with that. Like one of our newer ones is called Compliance Engine. One of the things that most people are concerned with when offering crypto and offering stablecoins to their users is just compliance. And so we offer a compliance add-on that people can use to make sure that they're adhering to any compliance requirements that they have. And then we have a suite of other products that we continue to innovate on that are kind of just easier ways for people to develop in the space. And so we have a smart contract platform. We have a gas station that makes it easier for you to abstract gas fees away from your users or help them pay gas in USDC. And then we continue to just innovate in the space, and we call it our Web3 services product offering that just makes it easier for people to build Web3 services in their products.
Yeah, I think that's a very interesting innovation that's come up lately, and I'm wondering how much you guys have had a hand in it. Is all this like gas sponsorship or paying gas in non-native tokens? Superchain comes to mind as one example. Could you talk to people that are maybe like unfamiliar with some things like gas sponsorship or paying in like USDC for transactions?
Yeah, I think gas is one of the things we need to solve as an industry. For anyone new coming into the space, I think the worst thing that we hear is someone gets USDC on Ethereum. It's a small amount, and they try to do their first transaction, and the majority of the transaction goes to gas fees on on Ethereum, and that's just like a really poor product experience. And so, one thing we think about is how do we abstract away sort of some of those complexities that people don't even need to think about. Okay, this is the chain I need to choose. I see USDCs available on 16 chains. They're all $1. Which one do I choose? How do we make it just dead simple for the user just to use digital dollars on the internet, just to use the best USDC based on their use case? That's one thing that we're thinking out a little bit more further out. Two, I think the easier solution is just making it the default to pay for gas in USDC. I think that's one option because most people will be familiar with USDC. They'll hold USDC and they don't have to buy any more of any tokens that they might not want to hold. They can just pay it in USDC. Or two, the ideal scenario there would be we get gas fees so cheap using L2s or efficient L1s that whoever is facilitating the transaction just can sponsor the gas fee on the back end, and so pay USDC from the company's treasury or whoever's sponsoring that transaction, and just make it free for the user so they don't have to see 0.1 cent or 0.0001 cent or whatever it is. That's a really nominal fee. I think that we're getting there post Denkin upgrade, especially with L2s, that the average transaction cost, at least over the last 6 months for L2s, has been less than a cent. And so if we keep working towards those efficiencies and make it better and better to send USDC on chain, hopefully gas just kind of all gets abstracted away eventually.
Yeah, gas and hopefully chains as well. I was tell you listeners an interesting story, not necessarily a funny story, but I was trying to pay for some olive oil from a friend that brought it in from the US. Not necessarily easy to get. So I paid him in crypto, but I go on my wallet. It's like $16 on Ethereum to send the transaction. I'm like, can I send it to Base? And he's like, what's that? I had to explain like L2s, why it's much cheaper, why it's like kind of like practically the same thing, and how to access it in MetaMask. And I was like, we've still got a long way to go.
We actually have a product that's really gained market dominance for USDC bridging, but it's called Cross-Chain Transfer Protocol. And it essentially makes it very cost effective to bridge from one chain to another. for that exact problem. If you have USDC on a chain where it's really going to be a problem, how do you bridge it to another chain? Using someone like Circle, because since we're the sole minters of USDC, essentially, if you think about it on the back end, you could say, I want to burn this USDC on ETH and mint it as USDC on Base through cross-chain transfer protocol. That products can build on top of. We can make that much easier for people to do. And I think that'll continue to proliferate. Like I said, kind of in the beginning, how do we just make it for the use case that people are using, match USDC on the right network, or however we do it sort of on the back end, just to make it as easy as possible.
Yeah, that's quite interesting. If you looked at like USDC Anywhere or the superchain stuff, is that largely how they're doing it? Because essentially the way I'm familiar with it is it's like irrespective of where your USDC lives on which chain, provided it's in probably a select few chains, it's as if your balance is just $35 instead of like $17, $4 on this one, $5. Is that essentially how that works, or it's a completely separate product?
I think that's a different product. I think that's the vision we're working towards. And so not every chain that supports USDC is part of cross-chain transfer protocol. And so that's something we need to continue to work on to develop. But I think that's the ideal scenario, right? You hold USDC on 16 chains, like you should probably just see one USDC balance. I think that there's like a backend component of that, which CCTP probably plays a big role in. But then there's like a huge like UX, what do you see as the user sort of visual in that as well, which I think is up to like the partners building with USDC. And I think that we kind of have to get there as we roll USDC out across more and more chains. Like it just doesn't make sense from a user perspective for a user to have to pick which USDC they use across 16 chains, especially for new users.
Yeah, when I first came to the crypto ecosystem, I thought that was one of the craziest thing. It's like, it's USDC, but it's actually different because it's on a different chain. You're like, it's different, but it's the same. Actually, yeah. If you wouldn't mind explaining that concept to people that are relatively new.
Yeah, I get screenshots from people because I'm telling everyone about USDC, and they'll go to an exchange and they'll send me a screenshot. It's literally just USDC on every chain. Everyone's $1. And I think that we're kind of in this exciting phase as an industry where it's like, okay, we have people interested in stablecoins. They know what they are. They know how they want to use them. They've heard all these stories about it. Now we're at this point where it's, how do we just innovate to continue to make it easier and easier for them to use it? If we are saying, oh, they'll figure it out, they'll try things and they'll lose some money, like we're past the early innovators. If you think of like a crossing the chasm perspective, the early innovators are the people who are willing to like adhere those pain points. Like I've paid too much money in fees just to be able to buy things in USDC, just to try it, because I'm like excited about the space and excited where we can go. We're to the point where we need to make things better. We need to make things easier. If someone's willing to give USDC a chance on one of our platforms that we work with and one of our partners, it needs to be simple, and we want them to come back and we want them to keep using it because it solves problems for them the first time, and it'll continue to solve problems for them better and better every time that they use it.
Absolutely. And now you're the director of marketing. Talk to us a little bit about marketing in the stablecoin market. Like, I've always thought that stablecoins could be largely like a winner take all market. Like you see a lot more interest around stablecoins, but it seems like, because it's very trust based, that you might only have like 3 or 4, maybe even 2 providers that really dominate the space. What's your general perspective on the space, and how do you market to, really differentiate yourself?
Yeah, it's kind of funny marketing stablecoins because we are attached to the crypto industry. We are a blockchain technology, but we appeal so much more broadly to anyone. If you think about the like total addressable market for stablecoins, it's anyone who uses money, which is anyone in the world. And so how we think about marketing stablecoins is, how do we just think about the fundamental components of money, which is store of value, unit of account, medium of exchange, if you really like boil it down to like why money exists. And how do we show people how USDC and stablecoins as a whole are just a better form factor of money and make it better for all of those things. And so we start really simply with that. We kind of go after the areas that have a lot of traction and then are how stablecoins are being used today. And so it's a lot of, like I said, sending, saving, trading with USDC. But then also, how do we sort of paint the future of like digital finance and digital money and how people should be thinking about these things as well? And so it's kind of a weight of how do we sort of like add fuel to the fire of how people use stablecoins today, but then also how do we get people innovating and thinking about stablecoins in a creative way that they haven't thought about before? And then Circle also takes on sort of the perspective of how do we also lead the charge from a business perspective and getting large businesses, Fortune 500s, institutions to adopt this, all of the big fintech players that work with all of the end users around the world. You know, you think about the new banks and the Grabs and the people that are really innovating with Circle and USDC. And then also, how do we advocate for proper regulation in the US and around the world? Circle's been key in a lot of those conversations, and we want to continue to put our best foot forward and always do the right thing and make sure that we continue to build trust in stablecoins and USDC and everything we're sort of working towards.
And then, you know, we've obviously got the institutional players, we've got retail. So those people need to be marketed towards. Now, this is kind of a joke question, but it could be taken seriously. We've got AI agents. When do we have to start marketing to them to be the predominant stablecoin there?
This conversation's been coming up more and more. The question, at least I'm starting to land in, is like, do AI agents need to be marketed to, or do they just know the best thing to use? And it's funny, I think that like on the All In podcast, I think like Chamath brought this up like a year ago, and his take was AI agents are just going to know, like they're going to use crypto because it doesn't make sense to use like your bank account to make payments. It doesn't make sense. You know, let's even say an agent is negotiating with the other agent. Like, why would they pay with a credit card and pay a 3% processing fee that other agent has to take a hit on? They're going to use crypto, and most likely they're going to use stable coins to facilitate these transactions amongst themselves. And so I think the question can be like, how do they need to be marketed to? I think the other question is, how do we make sure that agents have what they need to build their payment processes and flows using stablecoins? How do we make sure that they have the right API documentation? How do we make sure they have an easy way to access USDC? There's companies starting to innovate really quickly in the space around these things. I think you probably saw a couple weeks ago, Coinbase announced that the first agent-to-agent transaction was conducted in USDC for the first time ever. Brian Armstrong announced a couple weeks ago. Just within the last week or two, Crossmint, one of our partners, announced that it's free for AI agents to transact in USDC using their new agent product that they announced. And so I think that the right people and the right builders in the space are starting to just think, how do we get these agents the right access and the right documentation they need to just be able to do these things? And I think an even better question that you're asking is like, how do we market to them? Can we market to them? Like, it's cool things to be thinking about. I'm glad I'm thinking about these things and not B2B software, because I think it's much more exciting problems to be thinking about and solving.
Yeah, it's quite an interesting issue. I mean, I've run this podcast for Zero Gravity, one of my clients, and we've been talking about AI agents for a long time. And it was only within really like the last like 2 months that we really saw a lot of like actual material buzz around it from people outside the nerdy AI corners that I lurk in.
Now, yeah, this is one that's starting to like, it's because I'm trying to write about this too, because I try to write about these things to learn. And this is one that's like, it feels even out of my wheelhouse to conceptualize. And so it's a fun problem to think abstractly about the direction that a lot of this is going. And I think that it's just fun to pontificate and see like where this could potentially go and see if we can work in that direction.
Yeah, it was funny. Me and my roommate last night, he's an ex Discord and Airbnb engineer. I'm an ex Google non-practicing engineer. And we were like, we got to build something with agents. But then we were just sitting around like trying to think. We're like, it's going to be so obvious, the main use case of agents. We just can't think of it right now, but it will make us all feel dumb probably in like 2 years that we didn't all think of like the no-brainer AI agent solution. Curious if you think there is one. Maybe you have my future startup idea.
I don't know if I know it. I think that I've seen a lot of data recently suggesting that like a lot more people are opting to do pay by my bank account, which I think you can on like Airbnb now. Like I'll give you my bank number and my routing number, which just seems like a terrible way like to try to do something is like give someone that information. And so the reason that people are doing that is because, you know, Airbnb or whatever company passes through a little bit of a discount because they save 3% on the credit card processing fee. And so it just seems like a no-brainer that agents are going to be introduced. They're going to say, we'll pay with USDC, we'll pay with stablecoins. You give us, you know, 1% savings back and you save 2%. And I think that there's like playing around with that, those merchant fees and those credit card fees and almost having like agents negotiate the cost savings on both ends. Like, I feel like there's something like that in the works because there's, you know, we talk about it all the time. It's that like 3% credit card processing fee, but it just hasn't been solved yet. But there is a solution. Like it's stablecoins, it's USDC, it's paying with stablecoins and people accepting stablecoins. But how do we facilitate that transaction in the right way?
I guess if I'm thinking about this just from running my own business, I guess there's always the risk of chargebacks, which causes some percentage of that. I don't know how much the credit card companies actually reserve for that, like technicality, but that's probably a very interesting area to solve. Potentially on chain. I don't know how easy it would be to do. You have to get like on chain insurance for interesting area. I don't know if you guys have thought much about that area of like chargebacks.
Not a ton, but I mean, in theory, like stablecoins should be more secure transactions. They should be more secure in your wallet. They should be more secure payments. And so there should be less fraud, but there's sophistication around credit card payments that hasn't been built out around crypto and stablecoin payments that as the space grows and more adoption is kind of widespread. And as we kind of run into these problems, I think those things will come up. I think stablecoins and crypto payment are still so early, but like as we talk about it, Coinbase launched, I think the like second video of their series today, which is about credit card swiping. And I think their tagline is something like, you don't need crypto until you do. And they're talking about credit card payments and small businesses needing to save that money to go towards their business. Like as we continue to get this message out, as people adopt stablecoins and USDC as their preferred payment method, I think there's going to be other challenges that emerge and problems that we can solve, but we'll kind of take those as they come.
Yeah. And then you mentioned you also, was there a Euro stablecoin you guys also have in your portfolio?
Yeah. So we have EURC, which is our euro denominated stablecoin. It's approaching $100 million in market cap, which makes it the largest MiCA compliant euro denominated stablecoin on the market. And we're excited to see more people do with it. We do more with it. We launched on Base a couple of months ago, and that makes it, I think, the fourth or fifth chain that EURC is on. And so just continuing to do more with some of the biggest currencies around the world. You know, USD denominated stablecoins make up about 99% of the market today. Just continuing to do more with other local stablecoins, I think we'll really start to see the benefit. I talked about foreign exchange kind of earlier. Like if you could just swap between USD and euros using USDC and EURC, we're already starting to see people start to do that and the efficiencies that can be gained. I think that as stablecoins grow out from a global network perspective to all of these different countries using all of these different currencies, stable coins are just going to get better and better, which is going to be great to see.
Do you foresee a world where, like, obviously we have the we'll call them like the majors, we got the USD, we've got Euro. Do you see a world where like, okay, like now the Swiss franc is like has a stable coin and many of these like larger countries will start to mint their own stable coins?
It's hard to imagine that doesn't happen at some level. Just thinking from a broader stablecoin perspective, if people look at USDC and the benefits that it's provided to the US dollar from a stablecoin companies buying treasuries and government debt, and just kind of how it's really improved the strength of the dollar seemingly. It's hard to imagine that everyone wouldn't want to do the same with their currency. It's kind of just how people go about that. One is a stable coin in a local currency. Other people talk about central bank digital currencies. Like I think we're in this kind of, everyone's thinking about what their stable coin / digital currency play is next. It's just, what are people going to do? What do we continue to see over the next couple of years? I think it makes it a really interesting space to watch.
Yeah, absolutely. And then, okay, so 5 years in the future, is our mothers or grandparents, are they paying with stable coins when they go to like a 7-Eleven or a place? Do you think like we're going to get pretty broad adoption, or we think this will largely be the thing of financial institutions and people that are doing cross-border payments?
I think we get to that level eventually. I don't know if it's 5 years or if it's 10 years from now. And I also don't know, what the brand they know that they're using. I don't know if they know that they're using USDC or if it's USDC behind the scenes, kind of powering it on the back end. But, USDC and stablecoins, in my mind, are in some part of that flow at some point, whether it's the next 5 to 10 to 15 years. To me, it feels inevitable. I've also drank the Kool-Aid. I'm biased. I have a USDC hat on, and so, but it's hard for me not to believe, with like the momentum that we see and the innovation we continue to see in the space and the efficiencies that are gained from this technology, that they're not part of the flow from some point of view in the future.
Yeah, my suspicion is a lot of this stuff will eventually be abstracted and it will all be behind the scenes. Just, I always think and I make this, people will be bored of this on the podcast because I say it all the time, but my mom like never goes to a website. It's like, oh, MongoDB, or like, oh, BigQuery. And it's just like, it's just working in the background. So I suspect we'll live in a world where like the Apple wallet is just a crypto wallet under the hood and people just don't know it. But that's my general, maybe like overly Kool-Aid take on where I think things are going.
I don't think so. As USDC, we really just want like adoption, and we want people to sort of reap the benefits of this technology. And so if you just see that you're spending dollars, but it's all USDC on the back end, I think that works. I think that why the USDC brand holds value right now is because people know that USDC is a digital dollar. And so it's almost like a benefit for them to know that they're paying in stable coins or digital dollars, because they know the efficiencies gained through it. And so we'll see, as more fintechs and products that have access to millions to tens of millions to hundreds of millions of end users, as they test and innovate in the space and do what they're really good at, which is getting users to adopt some of this technology and kind of abstracting those complexities away. We'll see how it all plays out.
Absolutely. Well, I appreciate you coming on here. And any final thoughts or any like milestones, anything you want to mention that you didn't feel like we went over?
Nothing that I can think of.
Hey, there we go. Hey, that just means I'm a good interviewer. But any milestones people should take a look at, or any like new things on the horizon that will be interesting for people?
Yeah, I mean, fiat-backed stablecoins are at an all-time high right now, so that's a monumental achievement that we've sort of unlocked. There's been M&A in the space with stablecoins. You have podcasts and media companies now that are popping up around stablecoins, and so don't feel like you're too late. Like, now is the time where stablecoins are just starting to really see the amplification that I think they've deserved for a long time. And so just pay attention to the space, and I think we'll continue to see really, really exciting things from stablecoins.
Absolutely. Well, everyone, thank you for listening in, and let's continue building the future of Web3.